I'm Dave Cates, President, CEO of Denison Mines Corp. We're traded on the TSX under the symbol DML and on the NYSE American under the symbol DNN. We're a uranium development and exploration company focused in the Athabasca Basin region of northern Saskatchewan. Our flagship project is the Wheeler River Project, and it's being advanced right now through the permitting and feasibility study stages with a vision of becoming the next new uranium producer in the Athabasca region.
David, good to see you. Been a while. I think it was August, actually. So you've been quite busy. Lots of headlines out there. I think what I'd like to do today, if it's okay with you, let's get back and remind ourselves, what's going on at your company, and a little bit less about what's going on in the world, because there's some pretty wild theories and thoughts about Russia, Ukraine, Kazatomprom, privatizations, and what this kind of supply demand story is. So maybe we'll come back and visit that next time. So let's talk about you. Right. Wheeler River Project. You've got a couple of things going on there. Let's remind people what it is that you've got, and then we'll maybe dig into what you're doing in terms of moving that project forward.
Yeah, Matt, look, I think that's a great idea to focus on the Denison story and just, on the market. The whole thing is we haven't been reliant on the market story. And so our company has been focused on a project that would make money before the uranium price lifted. And so we are, I think, less sensitive, and our investors can be a little less concerned about the volatility that we're seeing in some of the narratives around the market, because we've got one of those real low-cost, high-quality projects that doesn't rely on a peak or a spike in the uranium price. But no, look, it has been a really exciting last 12 to 6 months. We last time we picked up, we were in the middle of a lot of things. And since then, we've had a lot of great news come out reflecting the results of just months and months of work in the field with our project at Wheeler River. So, yeah, I mean, let's get into it. The biggest thing, and maybe I'll sort of kick off, and you can probe and pry as you do, was our field test at Phoenix. So this was a milestone accomplishment for us, and it was the focus of our activity in 2021, was around installing a 5-spot ISR test pattern right into phase 1 of the Phoenix deposit, operating it first with water. So we now have large diameter wells. We're operating it with pumping capacities that should be comparable to a commercial setting. We've got all of our monitoring wells around, collecting just mass amounts of hydrogeologic data to build the database we need to mine plan this ISR operation. All of that went extremely successful. So we moved to a second part of the test, which involved a tracer. And this is really exciting for us, because another industry first to do this kind of test in the Athabasca Basin. We used basically an inorganic salt that we added to the solution that we're pumping into our test pattern. We operated the pattern in reverse. So we normally would inject on the outer wells and recover through the center. Here we used the tracer and we injected in the center so that we could see when we were actually recovering that same solution in each of our surrounding ring wells in the commercial pattern. And that was critical because we were able to establish breakthrough times. We were able to establish that we didn't lose tracer out of our pattern into our monitoring wells. We didn't pick up any tracer in our surrounding monitoring wells. So we had real control over that pattern. And we were even able to do a cleanup phase because of this tracer. So we could then pump water without the tracer through the system, or keep pumping out of the system, and see how quickly we drop that tracer level down. At the end of the day, four big takeaways. One, we got commercial scale flow rates, which were consistent with our pre-feasibility study. Okay, this is like tangible validation of key assumptions in our PFS. Flow rates were there. Second, we had hydraulic control. We didn't see that tracer leave our pattern. We could control it. Third were the breakthrough times. They were actually consistent with what we had developed in all of our earlier models from all of our earlier test work. So big hydro models that we called the proof of concept model that we've announced previously, that kind of model, we proved up the breakthrough time we were expecting from that modeling. And then fourth is the cleanup, the ability to actually show that we not only controlled it, but could cleanse that area of the ore body from our tracer. all of that, just really critical stuff for our project.
Okay, so that's the ISR component. Phoenix is the ISR component, and we'll talk about Griffin in a second. Right. So take 50% roughly of the world's uranium produced ISR. It technically, you should be able to solve this, and you're going through the process of working out how it works for you guys. We've talked in the past about freeze domes, freeze walls, etc., all leading to the end game here, which is trying to get a permit and trying to get the First Nations on board with what it is that you're doing here, because technically you don't feel that you've got an issue. I noticed the recent announcement of the adoption of the Indigenous Peoples Policy, which is a good start. I mean, I don't know if you want to kind of get into that, because I thought you made some great references on a panel that we did with you, at the end of last year. But you've got to get the First Nations on board. Talking technical is one thing. Getting them involved and understanding this as you go through a process is another. So what are you doing about ensuring that you're doing everything you possibly can about getting a permit to actually allow you to extract U3O8?
Look, the thing is, they're not actually separate concepts. The technical de-risking is critical to providing confidence and understanding to what we're doing, which is a really important part of the Indigenous engagement side of things. So, and permitting and regulatory. So this test and the outcomes from it, yes, they're critical on de-risking the fact that the ISR will work. But that's exactly the same question that we get from the interested parties, right? Is, well, how do we know that the ISR will work? How do we know that you will be able to control the mining solution that you inject in? And so these results really do become critical parts of the environmental assessment. They validate the assumptions we have in the environmental assessment. And all of that is what we end up consulting with our communities with, is walking them through. This is the test we have done, right? We've done a test with something that couldn't harm the environment, but through doing that, we've shown that we can control it, we can reclaim it, and that our modeling and all the testing we're done is real and it's validated, which can give everyone great confidence that when we do outline the possible implications for the environment and the ways we're mitigating it, we have like actual results to back it up. It's not just take us on our word that this is how the design should work. We're now able to show this is how the design does work because we've done it.
But you're still going to get, and that's fine. And we were talking to a company this week who's looking to, pick up metals in the form of nodes from the seabed, deep ocean seabed. They have got a 2-page list of people who object to this because they don't understand the science, right? The work has been done. You guys in this space see those sorts of objections, coming through from NGOs, et cetera, from all around the world. Right? So with the work that you've done now, how much more work have you got to do to be able to say, look, we're confident of what we can extract. We're confident of what we'll leave behind when we stop producing here, and get the support of not just the province and the government, but ensure that you're not going to be paralyzed by this constant objections of whether it be First Nations or other NGO type groups. What's it going to take, do you think?
Well, look, this is where the Indigenous Peoples Policy is really useful in terms of articulating our approach. It definitely takes the technical side of it. Everyone is sophisticated. Everyone's interested in the technical side. But our top line on our sort of objectives of that Indigenous Peoples Policy is around engagement. And it takes sustained, regular, ongoing, early engagement to be able to have interested parties feel comfortable about what you're doing, that they follow along with the results, that their questions are asked and answered. I mean, that's the core to it, really, is it's a respect that we think is necessary between our business and the traditional territories and the other interested parties that have traditional territories where we're working. And really, it's no different than if you were thinking about your neighbor and how you respect your neighbor, right? Like if you're going to build a pool, and disrupt the street and all of these other things, the respectful thing, definitely talk to your neighbor about what's happening, why it's happening, how it's not going to affect them or if it is going to affect them, how you're going to deal with that. We're trying to apply the same common sense level of respect, but also understanding there's something higher than that, which is that this traditional territory that we're working in, it's not our yard in that neighbor and pool scenario. It's actually belongs to the indigenous groups. It's their traditional territory. So we do try to bring that level of respect through.
Well, you've got to, because it's the right thing to do, and you've got to, otherwise it'll paralyze your business. We've seen that happen in a lot of Canadian companies, right? So, has it, by working on this adoption of this Indigenous peoples policy, has that, plus the work you did previously, started to shape your understanding of the timing? Because when we first talked, you thought this thing was 2-3 years away, right? There's early days. We spoke 2 years ago. Your sense of timing then versus what it is now, have you had to reset?
Definitely, we're disrupted by the pandemic. So that has caused a reset. It wasn't right for us to continue consultation right at the beginning or onset of the pandemic and try to do a roadshow through the Indigenous communities. I mean, that was a decision we made and we formally suspended. Now we are back at it. And timelines, we do have better visibility to milestones. And so the next milestone on the environmental assessment front, and there's a tremendous amount of engagement, of course, that goes into the environmental assessment, is the submission of the draft environmental impact statement. And we are generally on track to be submitting that in the first half of this year. That then sort of moves things into another phase. So to this point, we've been doing engagement, consultation, and assessments, scientific assessments, technical work, identifying what are the possible impacts of our project. All of that gets built into the EIS. At the same time, we're going to pull all that information and the feedback into our feasibility study because we want our project design to actually reflect the outcomes of consultation. But once that draft EIS is submitted, it's sort of the ball is now in the other court of this, regulatory tennis match, if we want to call it that. The regulators then are tasked with their responsibility of taking that material, analyzing, considering from a regulatory standpoint, carrying out their own consultation with the impacted or interested parties. And then that, of course, sets a ping pong or tennis match of questions and responses, questions and responses. Now that timeline, we can tell you we're on track for submission middle of this year. The timeline of the back and forth, of course, it will depend on how many, hits there are back and forth over the net. We would guide that this is something that could be a 2-year type process before we could get to a final approved EIS. So that we do have more clarity on than if we go back a few years in terms of how long it will take, but it is still, and it's, I don't want to suggest, the project's being built tomorrow. It's still subject to risk. Every project that goes through permitting will be subject to timing risk. It
is, but you're $1.2 billion company, so I think people are assuming things will carry on as you've laid out, right? So, and to that point, do you feel that? Sorry, we will get on to Griffin, I promise. Do you feel that? Perhaps the market has got a little bit ahead of itself. Perhaps there's a little bit of backfilling to do because the process that you're outlining here, the comments that come into us are, my goodness, it's all just a bit boring. It's all a bit kind of worthy stuff. And, why can't they just kind of get on with the business, doing the business? You're saying it's critical. It's mission critical, business critical to do this way. And this is how long it will take. You've had that realization early on, right?
Look, I mean, it is. Look, regulatory work is boring. The investors are generally right about that, and regulatory work is also not the greatest in terms of a risk reward for the investor because generally there's a value that's built into a company, and there's a presumption that the regulatory work will proceed as planned. You're right. We're a $1.2 billion company. There's no shortage of us putting resources to this. We will not be short on resources. But I think our case is different for a very important reason. I think in the mining curve life cycle, everyone's seen the Lassonde curve and that trough. Like that permitting trough is boring for most companies. Where we're different is we've never really necessarily received the value because of our mining method selection. And we haven't been as boring a story, and we won't be because we continue to de-risk the mining method selection. So I'll give you an example of this year. Yes, submitting the draft EIS, significant milestone. Arguably not the most exciting milestone. I mean, it starts the clock on the regulatory ping pong. So good that it happens, has to happen. If we don't do it, we don't start the clock. But what's more important for our story this year is the fact that we're planning a feasibility field test that is taking that test I talked about earlier with the commercial scale pattern and to the next level in support of both the environmental assessment and the feasibility study. Now that test, what we're intending to do here is take part of the pattern and actually use a mining solution, an acidic solution, to, a controlled injection of it to combine all the work we've done in the lab from our metallurgy with all the work we've done in the field and recover an actual small quantity of uranium-bearing solution by mining part of, or test mining part of that pattern. Now, that for us would be quite, the ultimate milestone in our journey on bringing ISR mining to the Athabasca Basin. Critical for the feasibility study because it'll give us that validation we need, but it'll also give us really important outcomes for the environmental assessment and confirming our assumptions. So when I look at the regulatory timeline that most companies have, I don't think we've got that sort of static story. Like this is a de-risking event that I could see the analyst community, like they've done all along the way over the last 2-3 years, saying, well, look, this test is actually tangible, and I'm going to change my price to NAV target, or I'm going to change my discount rate assumption because the risk around this project is going down every time these guys are successful. And that I think is really different. When you have a conventional operation, conventional plan, everyone presumes it's going to work, and your regulatory window is just a risky time to own the stock. I think we've given our investors something that more than offsets that because of the tremendous success that we're having de-risking the mining method.
You are moving it forward, and that's good, as you should. You need to do that on the ISR project for all the technical reasons we've talked about ad nauseum previously. I'm just kind of conscious of time here. You give me hard stop dates at times, so I need to work to that. Which is obviously Griffin, more conventional, and in conjunction with 22.5% ownership of McClean Lake uranium mill. It's something that people can understand a little bit better and perhaps put a value on. But and maybe there's not too much more to say about it than that. But what I'm trying to get from you is, given what you said around permitting and the EIS process and how you believe you're slightly unconventional compared to some of the other North American uranium stories in that sense, is where you see yourself globally. Because if I look at social media, the mania that's going on at the moment in terms of the wild claims and pointing and accusations and so forth, it's very different from, say, the nickel space, where most people in the nickel space, we need all of the above. We're all in the same boat. I hope we all make it because that's what the demand story says. Uranium seems much more combative and more competitive, right? But the difference being, you've got low-grade stuff going on, low-grade projects in Africa, decent sized scale and a history there. And you've got the whole North American story going, where it's super high grade, super low cost, super high margin. It's fantastic. But there's a expectation that it's going to take a little bit longer to kind of get into production, right? So you need to work at how you pitch yourself. Denison, you only care about you. You don't care about the other people in North America. How you fit into that ecosystem and how investors should look at you as part of their investment portfolio. That's what you're selling here. So what are the things that you direct people to?
Well, look, I mean, that's a great question. And it is a unique part of our industry, the way there are so many different narratives that suit the different types of projects. And of course, everyone wishes in a way that we could have a less competitive, a more friendly industry. But it really is driven by the different strategies and the necessity of those strategies for the different companies. In our case, like touching on Griffin is excellent, because as Phoenix moves forward and the greater the confidence grows on Phoenix and the further we progress it, we are turning our minds to what Phoenix does for our company. It's not just about one project and generating the NPV from Phoenix. Phoenix and our company is unique in that Phoenix has that potential to open the door to other low-cost development assets. Phoenix doesn't need the price to be higher because of its potential to compete with the Kazakh production all-in costs. But, Griffin is right there with McArthur River Cigar Lake when it comes to all-in cost per pound based on our estimates. And our THT deposit at Waterbury Lake, not much higher. We're talking 2 projects there between Griffin and THT that have all-in costs under $25 US per pound. Now that is better than most/almost all other development projects in the world. And Phoenix is really the catalyst to funding us internally, generating that cash flow where we can then take our teams that have gone and licensed and permitted and designed Phoenix and pivot them right to the next project at Griffin at THT. The other thing is, I think 2022, like if I were to sort of guide, nugget for the investors out there, I think 2022 is an interesting year where you'll see more focus from us on other assets, like at McClean and Midwest. We had a tremendous success with our partners at McClean in Orano, testing the Sabre mining method. Probably a whole nother call or chat for us, Matt, to talk about Sabre. But that's an area where we are planning with Orano to go back at assessing what does Sabre do for the unmined McClean deposits right near the mill? What does Sabre do for Midwest? And I know that we'd love to study what does ISR do for Midwest. These are projects that, between the will of Orano and Denison, I think we're going to see more attention come to these projects. And they might actually be quite competitive when we bring these mining methods to the table instead of, conventional underground or open pit approaches that just don't fit that well for these deposits. And then, our story at the end of it becomes Phoenix, Griffin, Waterbury, THT, Midwest, McClean. It's a portfolio of potentially producing assets in the bottom section, about quartile, whatever it is, of that cost curve. That's where we're really going.
Better together or better apart? Because you've got a lot of cash. You cashed in on the GoVX stuff. You've been collecting debt, I see, and you obviously got paid back the loan to UEX, right? So you got a bunch of cash and equities available to you. A big portfolio, lots of exploration potential. Right. And these kind of obviously bankers, which I think have been, valued into the way people are valuing the company today. So better together or better apart for your shareholders? What's the plan?
Yeah. So our view is better together. Doesn't mean that there aren't parts that would be better apart. I'll tell you, like when we came out with the ISR mining, before we put out the announcement, we looked through the entire universe of projects to find any other projects in the Athabasca Basin that we could acquire, on the cheap before the news came out on what ISR might do for Phoenix. And they just weren't there. So from a developer, want to be a producer, want to be an intermediate producer standpoint, having assets that can be developed in your portfolio, they're valuable. And whether we get the value for it today is another question, but being able to have them there so when we do generate that cash flow, we do have multiple producing assets. That's how we're going to generate those larger scale returns for our investors. When we're just stuck on a value of one project, you just don't have that growth or additive potential to your narrative. People can't say, hey, look, these guys have got something that's very successful with ISR, and the value goes way beyond Phoenix. That's what we're trying to achieve. We don't want it to just be, well, if they're successful with the ISR, well, then Phoenix produces, and here's the value for Phoenix, good for them. It really is about having assets that you can deploy those returns to. When you get this further along, it's not just about mining it out, it's about what you will do with those returns. And for that reason, most of those assets, they're better within and as part of one.
So tell me about this. Again, I'm just conscious of your time frame here. And you're right, I'd love to come maybe get a little bit technical, geologically so, with you or your VP of exploration, trying to understand what you're seeing there and, how you're allocating capital and the drill bit, et cetera, to that. But if we look at can we just look at some numbers, please? Okay. In terms of the cash position at the moment is what?
So last update we've provided was end of September. So we were north of $50 million in cash. $25 million of equity investment. Since then, we did trade out of part of that GoviEx position. So cash will go up, equity investments will go down. And we had a large physical uranium position, obviously 2.5 million pounds. So we were sitting with over $200 million Canadian in working capital and investments at the end of the third quarter.
Okay, so I thought that was quite cute. Actually, going and buying pounds. One, kind of got eyes on you, and two, obviously at those prices, why wouldn't you? The arbitrage seemed eminently sensible and has proved to be the case. Do you feel that you need to do more of that kind of, what do I call it? Structured economics to get noticed, or you think now that you've got to focus on the business, and because you kind of got the institutional coverage now. I think that you were seeking, and obviously Spurt's doing all sorts of wonderful things. But I think Mark is now looking for you to actually move these projects forward and justify the valuations, right?
Yeah, no, look, we are obviously the record shows that we look at creative ideas. We are always monitoring our business. And we've been a leader generally in terms of most things that have happened in the sector where there's been creativity, trying to create value for our shareholders. We will always do that, right? That's our responsibility. That's our job. All that said, we're really happy with where we're sitting right now, and I don't see present need to do anything too inventive. On the capital markets side, we're happy with the structure. We're happy with the ATM that we have, being able to use it selectively. We've got a solid balance sheet. We don't have a need to raise capital. We raise it as it makes sense. And so we're very comfortable with where that's at. You have to remember that $200 million, that funds us through feasibility, environmental assessment, and into initially, we raised enough to be about a third of our capex at Phoenix, but with the appreciation in the uranium, we're probably testing almost half of our capex at Phoenix. So, that tells me that we have a really stable situation, and to your point, we now can focus on delivering the project, moving it through the feasibility and the environmental assessment, because the capital markets and balance sheet side is not the risk it was. We go back 2.5 years.
So obviously we've seen Spurt kind of emulate you guys and do the New York listing, and that's played well for them to a point. And then I think that shine has come off as people don't necessarily understand how the ATM works for Spurt, for the Sprott Physical Uranium Trust. For you guys, you've kind of mirrored what's going on in the market. As I think all uranium companies have. Therefore, the market's doing a lot of the heavy lifting for you guys, and as it's come off, you guys have come off too from those highs. So, what's your expectation of the way that this plays out this year? Uranium shareholders are famous for needing a catalyst moment. Spurt came and went. Are they going to come back? What else do we need to see? Because it's still frothy out there.
No, that's a good question. I think there's two things that I want to highlight. So there's still great potential for the Sprott Physical Uranium Trust. The ATM has been highly successful. They've upsized it. They've shown that it's a highly efficient way of raising capital and having the investors' interest affect the uranium market. What's ahead for them is still the New York listing. So they've essentially initiated it, but to be able to successfully list on the NYSE ARCA, with that product and provide just some effortless access for the giant base of U.S. investors to that product, I cannot underscore how relevant I think that is, and how relevant I thought that was when we were running UPC and when we put that provision in the agreement. We think that is a tremendous potential catalyst.
How long is it going to take? Because I'm not sure they know how long it will take and how long SEC will take to respond.
Yeah, I mean, obviously they're the right people to ask about that now. But I would have an expectation that there's a possibility this does happen in 2022. The second thing I want to flag for the market is you're sort of right, and sort of I'll challenge you on the equities reflecting the uranium market. we've got a disconnect that has emerged over the last 2 to 3 months. And let's use our physical uranium buying as an example. So we raised money, $1.10 US, to back that financing. We bought uranium at under $30, $29.60, something in that range. So now recently, we've had some good days in the last few days, but recently we were testing similar share price levels. And yet the uranium price, which has gone up and down and been supported, no doubt, by Sprott and others, has persisted in the mid 40s. So that financing to buy uranium that made sense for us a year ago, the equation, the math, the arbitrage, whatever we want to call it, it's not there today. All right, so there is a disconnect from the market on the uranium side to the equities. And I've been telling people, in various conferences, as I've been watching this happen, look, I think the uraniums are being caught up in broader market movements, had very successful performance for many people. People are taking risk off. But I think it's been a buying opportunity. And I do think that as the markets stabilize and people set their expectations around inflation and all of these other disruptions that are affecting the market, that they will come back to the fact that the uranium space is actually not a speculative space. It is a space that's backed by fundamentals. We have supply-demand fundamentals. We have pricing fundamentals. And when you see a uranium price that's persisted in the 40s, when you see record or recent record long-term contracting happening, these are things that tell me that the market is not speculative, it's substantive. And then you see the equities have diverged from that. That to me is a buying opportunity.
I agree with you. I absolutely agree with you because the fundamentals have not gone away, not one bit. My objection is the wild statements out there, the kind of desperate need for a greater fool theory to come into effect by saying anything at all to attract bidders into this space is actually damaging, because we if you're looking from outside into the uranium investor space, we look like crazy people. And, and that's off-putting. I'm going to go somewhere else. So believe in the fundamentals, the supply-demand story. Believe in the amount of money that's being spent by China and, extensions to, life of, all across Europe and in the US for some of these reactors. The story's strong enough. We don't need to make stuff up. I guess that's where I'm going. Like, it kind of saddens me to see those sorts of people being listened to, quite frankly. But look, David, I'm conscious of your time. I've got 1 minute to go. One, can you promise to come on and get a little bit technical on the exploration side of things? Because I think that's the potential blue sky. However you choose to deal with that, keep it, JV or sell it.
Let's do that.
Yeah,
we'll let's touch more on technical. We can do a little bit of ISR. We'll always sneak that in, and we'll do some targeting and technical. And look, I really appreciate the interest of everyone. And at the end of the day, you're right. The sector does not need to be excessively promotional. It has a fundamental story. There are good quality companies that have fundamental assets. It is natural when these kind of markets do heat up that you have a variety of new entrants who come in, a variety of stories and pitches. And I'll tell you, like, I'm an industry insider. I do not envy the job of being an industry outsider, trying to sift through the opportunities that are being presented, because it's difficult. And so, I'm with you, Matt. Like, focus on the fundamentals. Focus on what really matters. Focus on the good quality. And I'll talk to you soon. Thanks very much.